That is Harry Rady. He's CEO and portfolio manager with Rady Asset Management. Barbara Ryan, managing director and senior pharmaceutical analyst with Deutsche Bank Securities. It is good to have you on the program.
Thanks for having me.
Thanks for joining us. Barbara, let me kick this off with you. Can you give us a scenario on who are the winners and who are the losers if, in fact, we were to see the public option go away and the same situation with the public option on the table?
Well, I think, first we can say broadly that healthcare stocks are the winners because investors have been very reluctant to invest in the space, given that the rules of the game are quite uncertain. Put simply, if there is major reform and the rules change and the economics change, then obviously nobody wants to buy in front of that. That being said, the public option really had the greatest consequences for the hospitals and the managed care organizations, and so it's those stocks that we're seeing bounce most strongly today with the news that we saw over the weekend.
So what would you tell an investor as it relates to HMO stocks today then? Do you want to be betting that given the latest news, you want to be increasing your exposure here?
Well, I cover the pharmaceutical sector, so it's difficult for me to give, really specific advice on that. I think that what the market is saying, and certainly the process in Washington seems to be suggesting, is that reform is likely, if it comes at all, to be more moderate and evolutionary than it is to be revolutionary. And given that there was tremendous overhang in these stocks, if that in fact is the way that things play out, then I think, yes, these stocks probably will outperform the market for a little while.
It's pretty extraordinary, Harry, isn't it? Really the response from the public. You had an immediate and very adamant response to some of this with those town halls, et cetera. How do you see it?
We think great companies with strong patent portfolios and great IP will prosper no matter what happens. So we're not trying to predict the winners. We think that companies, the commoditized service providers, the HMOs, the generic drug makers, we think that under any scenario that they get squeezed. But companies that have these positions and these patents, they will do well. Companies like Cephalon. Cephalon is trading at 9 times earnings, growing at 15%. Historically, it's traded at 20 times earnings. And we think they're going to earn $4 a share. So we think there's 50% upside. Stocks like Myriad Genetics making new 52-week lows today. Once a year, maybe, we see an opportunity like this. The stock has grown historically at 50%. Earnings and revenues growing at more than 50%. Yet the stock's trading at 15 times earnings. They've got a pristine balance sheet. They've got $3 in NOL carry forwards, another $4 in cash, growing to $6 in cash. We think that this is one of the greatest growth stocks and one of the greatest opportunities we've seen in a long time. Myriad Genetics, we think, is a home run.
So you're really looking at balance sheets and sort of growth potential, regardless of what happens in Washington, what kind of new policies come out. You really just want to be sticking to your knitting, and that is fundamentals.
Yeah, I mean, you can't invest and try and rely on the government. I mean, right. The government is so unpredictable.
Right. No, I understand that. But at the same time, when you do see policies that actually will impact revenue, you want to be aware of things like that because it actually can change a situation.
Absolutely. But, we're contrarian investors. So when stocks are trading at their lows, we get interested. When stocks are trading at their highs, we start to look at them on the short side. So many of these stocks that we talked about, the service providers and the companies that sell commodity-oriented stocks, they've had a big run today and over the last couple of weeks. So many of these stocks are trading at their 52-week highs.
Right.
So many of these stocks are starting to show up on our short screens. Go ahead.
So Barbara, let me get you back in here on pharmaceuticals. Let me talk about your space. Give us your favorite picks here and how you want to be investing in healthcare. If, in fact, you're an investor out there and you do believe that you need exposure to healthcare, how do I do it? Do I want to be in those large pharma companies? And who is best positioned in your view?
Well, I think the last point was obviously, the most important point, and that is that at the end of the day, it's all going to come down to fundamentals. Our view is that whatever we see out of Washington, that the fundamental outlook for the major pharmaceutical companies, especially Pfizer and Merck, because they have done or are in the process of closing on major transactions, they have enormous earnings power due to the synergies and savings from those deals, and importantly, very high visibility to those strong cash flows over the next several years, and they are trading at their historic low valuations with relatively high dividend yields. So those would be our two favorite stocks in the group, and that would hold whether we got health care reform or we did not get health care reform. And in either case, I do not expect that I would change my earnings forecasts for either company for either of those outcomes in Washington.
So you do feel, though, that the investment scenario is there? Because, you know, you could have said that a year ago, right, Barbara? You could have said that 5 years ago, and in fact, we really haven't seen much movement.
Absolutely. I think what's changed today is companies are tackling their cost structure, so earnings and cash flows are improving. The multiples are a lot lower than they were then. These mergers are taking excess capacity out of the business, which unequivocally needs to happen. And we also have an uncertain economy, so maybe we're bumping along the bottom. But the question remains, what will the recovery look like? How steep will it be, and when will it come? And
right.
I think that what we're going to see is strong double-digit earnings growth, specifically at Merck and Pfizer next year, which probably is going to compare relatively well to the markets at a substantial discount in terms of multiples.
All right. Good conversation. We appreciate it. Harry, Barbara, thanks so much for your time. We appreciate you joining us today.
Maria.
Thanks, Maria.